Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings. Today we're cracking open a proxy statement from EVgo, an electric vehicle charging company, and trust me, there's more here than meets the eye. It's like peeking behind the curtain at a magic show. Things might not be what they seem. Pro statements are documents that companies send to their shareholders before annual meetings. They let you know what's on the agenda and how management wants you to vote on important issues. This one gives us a look at who's running the show and what changes they want to make. First off, there's the election of directors. EVgo's board is divided into three classes with staggered 3-year terms. This year, 3 Class I directors are up for election: Peter Anderson, Joseph Estevez, and Badar Khan. It's basically a popularity contest to see who gets to stay on the board for another 3 years. Shareholders get to vote and decide if they want to keep these guys around steering the ship. Next, there's the seemingly mundane but important ratification of KPMG as their independent registered public accounting firm. It may sound boring, but it's crucial. The audit committee, which is responsible for overseeing the company's financial reporting, has chosen KPMG to keep an eye on the books. The shareholders get to vote to approve this choice. Think of it like hiring a professional fact checker to make sure everything adds up. The company wants to increase the number of shares reserved under its long-term incentive plan. This is where things get interesting. EVgo is asking shareholders to approve an increase of 25 million shares to the plan. This is how EVgo plans to attract, retain, and motivate employees. It's like offering employees a piece of the pie, hoping they'll work harder to make the pie bigger. Let's dive into some frequently asked questions to better understand all of this. We will skip the obvious ones and focus on what matters. Broker non-votes happen when shareholders don't give their broker instructions on how to vote on non-routine matters. In that case, the broker can't vote those shares on those issues. It's like not showing up to vote. Your vote simply isn't counted for certain proposals. For electing directors, it's a simple plurality, meaning the nominees with the most votes win. For ratifying the accounting firm and approving the incentive plan amendment, it requires a majority vote. That's more than half of the shares present and entitled to vote must say yes. Let's take a closer look at the director nominees. Peter Anderson is a managing director at LS Power. Joseph Estevez is the chief financial officer of LS Power. Badar Khan is the chief executive officer of EVgo. It seems like LS Power has a significant influence on EVgo's board. Now let's scroll to the fees paid to the accounting firm. In 2024, audit fees were about $1.4 million, tax fees around $195,000, and other fees about $22,000. That's almost $1.7 million. In 2023, they paid about $1.9 million. It shows how much it costs to keep the financials in check. Here's the real kicker. EVgo needs more shares for its incentive plan to attract the best people. Otherwise, they might have to resort to old-fashioned things like, paying in cash. Under the plan, directors cannot be granted awards for more than $750,000 per year. Also, resizing, which means lowering the exercise price of options already granted, is not allowed. This is generally good and avoids further dilution. Okay, let's check the holdings of the named executive officers, or NEOs. This is the C-suite, the senior leaders of the company. Badar Khan has over 500,000 shares of stock, a mix of ones he owns outright or options to purchase the stock. Not bad. Dennis Kish is in a similar position with a mix of owned stock and options. The numbers seem to make sense and nothing jumps out as unusual. Non-employee directors get some compensation for being on the board, but also grants called restricted stock units. The non-employee directors receive cash and RSUs for a total annual compensation of around $200,000. This is fairly standard. Here, EVgo Member Holdings LLC owns the vast majority of Class B common stock, giving them a huge amount of voting power. It's clear that LS Power, through its control of EVgo Member Holdings, wields significant influence over the company's direction. So what's the story here? EVgo is trying to stay competitive in the fast-growing EV charging market. The company is using its stock to attract talent and keep its leaders happy. However, the heavy influence of LS Power raises some questions about who is really calling the shots. On one hand, EVgo appears to be taking necessary steps to secure its future with compensation, attracting the people they need with competitive stock options, and staying on top of regulatory compliance with audits. However, the concentration of voting power within LS Power means that smaller shareholders have little say. The company's long-term success hinges on whether LS Power's interests align with those of all shareholders. In conclusion, this proxy statement reveals a company at a crossroads, trying to balance growth and shareholder value with the interests of its major stakeholders. Thanks for watching. If you enjoyed, please subscribe, like, and comment.